Welcome to the Morley and McConkey Southern Utah Market Update. In this update, we will provide information relative to long-term trends and address concerns about market bubbles. The first section of the report looks at 10-year trends for Utah and Nevada, along with trends in each of the metros of Greater St. George, Las Vegas, and the Provo market. As we look at the market in Utah, the overall market has increased by nearly 17.5% from the market 10 years ago. Whereas when we look at the market conditions as they exist in Nevada, it's down nearly 8% from the market conditions of 10 years ago. As we look at the market conditions in St. George, they are slightly better, but not by very much. We're about 8% below the market as it existed in 10 years ago, which is significantly lower than the market for Utah as a whole. This is due in large part to the significant decline that had taken place. As we look at Nevada, or Las Vegas, Nevada, it's down nearly 15% from the market 10 years ago, again, largely due to the major declines. As we look at the Provo, Utah market, it's up nearly 14% from the market conditions as they existed 10 years ago. As we look at building permit activity, we had nearly 2,107 residential building permits in St. George with 420 in Iron County. However, there were only 2 duplex permits issued against 43 permits in Iron County. We have a severe shortage of smaller residential rental property lots that are zoned that will allow that type of development. As we look at market condition reports over the past 12 months, we see that overall prices have increased over the past 12 months. Keep in mind that the first section of the report is 6 months and the second 2 are 3 months each. The market conditions in the hurricane market are somewhat lower, with a 20% difference in the median price between St. George and Hurricane. As we look at residential building lots, we find that lot sales in the MLS tend to hover right around $90,000 with steady prices. As we look in the hurricane market, that market condition has been lower at about $60,000. There's nearly a $30,000 difference between the typical lot sale in hurricane versus those in St. George. As we look at the trends for nightly rental projects, they've become very popular. A lot of developers are looking to develop projects with nightly rental capabilities, and we've seen steady increases in that market. Office market is seeing declines in the vacancy rate, increases in the lease rates, and overall market conditions are favorable in the office market. As we look at the retail markets, generally those markets are seeing favorable increases as well, with the unanchored residential or retail properties being the worst. Residential rental properties have been very strong, with vacancies below 2% and steady increases in the rental rates. It's been very strong. Overall market conditions are favorable in southern Utah. If you'd like more information, feel free to contact us at the information here. Thank you.